Today on the workshop, a Trump proposal to reduce earning calls to just twice per year, a little gamma scalping, and the push to limit H-1B visas, its effect on the labor markets. All this and more after the bell.
Whoa, I was about to say, that was quick, slow on the uptake on that one.
It was a little delay today. A little delay. I love it. Good morning.
Morning. How you doing?
Good. Another Thursday almost in the books. I was on Jimmy and Bobby's show yesterday, which was a lot of fun. Those guys are crazy. They're crazy good. I love everything they talk about. They even get into politics, which I think is kind of fun. We've always steered clear of politics because you guys are from the East Coast. Anyway, so we're going to talk about a few things. I don't know if it's political or not, but the Trump proposal to reduce earning calls to twice per year as opposed to the standard quarterly, right? Let's hit that one first. Honestly, I'm not sure how I feel about this one. I like quarterly only I'll just throw this out. I like quarterly only because I like playing earnings in the option market. That's my only reason. Okay.
I think we need to clarify, Lex. He's not saying take away quarterly reports. He's saying to take away quarterly forecasts.
That's
so he doesn't want people to telegraph how much they think revenue will gain or whatever.
So what's the reason for that? Give me the logic behind that.
I think it's kind of hard. The advocates obviously say it increases transparency. I think for him, it decreases pressure and tries to make people more investment minded, or companies more investment minded. But ultimately, in many foreign markets, they only do it twice a year. I think they only do twice a year earnings reports too, right? So I don't really have a strong opinion one way or the other because I'm not as much of a traditional investor as most are. Yeah. But I think most people, if you own stock in a company, you want to be updated a lot more frequently, right?
Yeah. I guess that's a good point. So I totally understand the investor part of this. If you're in for the long haul, you really don't need, right, quarterly updates. I totally understand that. But I've never been that kind of person. That's a part of the assets that are done elsewhere. I'm more of a trader, and I think Mark's the same way. I'm not sure how Mark feels about this, but I like the quarterly announcements. I don't care about transparency when I'm trading. I just want movement. So I don't have a great answer. I'm selfish. Give me a move up or down. I want to take advantage of it. That's it. So kind of snotty, I know, but that's how I feel as a trader. Mark, any thoughts on this one at all?
Yeah, I think I'd like to put on my my trader's hat and say it's going to decrease volume. There's not going to be as much interesting movement or whatnot. A lot of these same criticisms came out around the Sarbanes-Oxley time, right? When there was the increased transparency and what a burden it is for companies. And okay, now people are managing expectations on a quarterly basis. I don't know, maybe there's something to that. But there's also something to the idea that investors deserve to know what's going on in the company that they own. So I think I'm with both of you in that I don't necessarily feel particularly strongly either way. Yep. But man, anything that goes against volume, I don't know if I can be a fan of.
Yeah, I agree with that. Here's a comment from Doug. I think it's short-term related to tariffs. Any thoughts on that? What do you mean by that? Doug, if you want to throw another one in there as to what you mean.
No, I know what he means. He's saying that he doesn't want companies saying the word tariff and scaring people away with
I missed that. I got it.
Yeah, that's a good point, I guess. But I think it's just I think it does create a little bit of a burden, but I don't know, I think it also depends on the industry. If you're in NVIDIA, you kind of want quarterly updates to their forecast because things are moving really quickly. But if you're, Dominion Energy and you're just sitting there with your utilities,
what's going to change?
Yeah, right? People are still using electricity. Thank you.
Right. Yeah, I don't know. I think I like the quarterly. I'm gonna put my hat down on that one. I don't want less volume. I don't mind the outsized moves on a quarterly basis. I'm fine with it. And by the way, Mark, you always allude to this, or not even allude. You actually say it, that the option markets are so well priced, right? Our hammer at the straddle level is pretty darn good most of the time, right? For these things, it's not like there's a lot of outlier surprises. There's some, granted, but not a ton. Thoughts?
Some of that comes from the fact that they are updating quarterly, right? Like, I think if you go to a lower frequency, you're probably, less information, less data points, a longer horizon, you're predicting, the results over. Like, that's going to create bigger surprises and bigger differentials, and like liquidity feeds on information. So I'm a fan of that. I'm a fan of more frequent reporting for that reason.
Okay. So you're like, maybe like what Doug said here again. If everything was booming, he'd want hourly reports. Maybe I like hourly. Give me the event space on earnings, man. Let's go.
Today we sold this many Big Macs.
That's right. All right, cool. Number 2, let's go to H-1B visas first before we get the gamma scalping, because this is, we'll stay in the newsy kind of part of the equation here. So there is this push to limit H-1B visas, and Jason, I think pre-show you had some opinions on this because it affects maybe your neck of the woods where you're located.
Yeah, I mean, H-1B visas first. Let's define what it is. Basically, it is a way to get foreign workers with a highly specialized skill set into America to work for a company. They're very restrictive on the worker side. So, I mean, if you are coming over on an H-1B visa, a company has to sponsor you. They pay a fee to the government, and the worker cannot find another company. Like, he can't move from that first company to another one.
What if he gets terminated at the company number 1? He has to do that process again?
They send him back.
Oh, they do. Okay.
Yeah.
It might be 30 days. You don't have much time.
Yeah.
Right.
So you get sent back. Yeah. And that's, they're, I think 75% of all H-1B visas go to Indians. Many of them are tech, right? Like, pretty much all H-1B visas are tech.
Yep.
So most of the H-1B visas, you talk about like your Metas, and they have a lot of them. And the reason why is because they pay $1,000 to the government, and they basically have this employee that they don't have to pay a lot because there's no competition for him, him or her. The goal of the employee usually is to come to America, work under that H-1B visa at a cheap price, and enter the green card lottery every single year. Keep trying to enter in that green card lottery, and when they get that green card, then they can move companies, and then they can make money. And that's the goal, and it's a way of legally immigrating to the U.S.
Okay.
In my neck of the woods, there's a lot of H-1B visas here in Loudoun County, Virginia. There's a lot of data centers in Ashburn, so there's a strong H-1B community here. And that's kind of the way things go. The proposal that Trump is issuing is, normally H-1B visas are $1,000 fee to the government to apply for.
Okay.
Trump wants to up it by 100 times to $100,000.
Wow.
To try to dissuade. And, basically what he's trying to do is say, instead of using these H-1B visas, have these domestic software developers get hired first, and then you can use the H-1B visa to try to make the algorithm, I guess you could say, the cost equation favor more domestic software developers. Nowadays, there's a lot of software developers, especially, again, in this area, getting laid off. A lot of contractors. I'm sorry, were you trying to talk, Lex?
No, I'm trying to tell my dog to shut up.
Well, I hope that's not a euphemism for me.
No,
so.
I put myself on mute and said, shut up.
But around here, there's a lot of software developers getting fired from government contractors in particular. Not a lot of government employees are losing their jobs yet from Doge or whatever, but a lot of contractors are, and a lot of developers are. So I think Trump is seeing his immediate geographic area be affected by by these layoffs. So he's trying to get domestic hiring first.
Let me ask you a question. Again, I'm not very well versed on this one, but I'm just thinking sort of logically. Maybe it's not logically; it's illogical. But if there is that sort of pressure on bringing these talented, technologists, let's call them for lack of a better term, here, doesn't that sort of incentivize a company to move the work abroad in a way?
Well, so the workers that are coming over here desire to stay here. I mean, India has basically H-1 visa farms like for training and all kinds of stuff out in India. Software development in India, like if you tried to hire a software developer in India, they're cheaper than anywhere else in the world,
right?
Pretty much because they have so many of them. But that being said, I don't think, especially in a software development world, you don't need to be in the same spot. I think a lot of especially big companies, Meta, all that, they want all their software developers to kind of be in a similar area, and they don't want to pay them a lot. And the H-1B visa program allows them to do that. It is kind of a broken program because of how cheap you can get the labor, and it's kind of unfair to not only the person coming over, but also to domestic software development,
Right.
So I'm not completely against the policy, but the thing, I think instead of just giving that money to the government, and the government trying to take advantage of this program, for monetary purposes, they should have higher wage requirements for H-1B visa recipients. That would change the calculus the same way and be more fair to the person coming over. But this kind of does the same thing and gives the money to the government. So
yeah, I mean, I don't know. I can think of a handful of ways to skirt this if I'm a company. That's all. I mean, you could, like I said, you're going to move talent overseas, or you set up a shell company in Grand Cayman, and their members there or whatever, and knock yourself out. I don't know. I don't know. I'm not sure how I feel about this.
The visa itself comes from the U.S. government, so you can't set up a shell company in Cayman, have like a Cayman visa. That doesn't work that way. You have to go through the American government in order to become, in order to get the visa.
Right.
In order to come to America, you have to get it through the American government. You can't just be a shell company in Cayman.
Yep.
I kind of think, you can to move your whole operation overseas. There's a lot of other considerations too, especially for development. The electrical grid is one. All the data centers in America. America has the best internet kind of center. The infrastructure.
Yep.
So I don't know. Moving it overseas is a thought, but it's not. I think that America's the place to be if you're doing any kind of software development work.
Right. What was interesting though, I think when this news came out, what was it, a week ago now? I can't remember. Several days to a week. I think we initially, the tech sector got hit a little bit, and then it kind of, hit a floor and just bounced and screamed, right? As a result of this. So that was an interesting tell, I thought. So the markets absorbed it pretty well.
Yeah, I mean, a lot of it. I think it went down for one reason, which was the H-1B visa fee, because that is a huge increase in new applications. But I think it bounced because of all the billions that people are saying they're going to invest in OpenAI and Intel and all that kind of stuff. So I don't even know how these billions are going to be spent. It's just I will invest $55 billion in OpenAI. Okay. It's just, the goal is throw a big number out there and make Trump happy.
Yeah, there you go. All right.
Are issued any given year? Does anyone know?
Say that again. Would you say, Mark?
How many H-1Bs get issued in any given year?
Yeah, I had that up here. Jason, do you know? 65,000 regular, 20,000 for master's degree or higher from U.S. schools, and then it says most go to tech, healthcare, and finance.
Mm-hmm.
So those are the numbers I have, and I don't know how accurate they are, but that's what I got. 65,000 regular.
Yeah, I don't know how many of those are renewals. So probably I don't know if that counts for renewals.
I don't know.
A lot of them probably are renewals.
Right.
And that 100,000 doesn't count for renewals or renewed applications. It won't count for. It's just new ones.
Yep. Okay. All right, let's. I know we got a tight window today. Sorry. Let's move to your question from one of your viewers, Jason, or followers, the Jason follower. Tell us about it. It's about gamma.
Yeah. So, I mean, I get, obviously I get a lot of retail traffic, and some people started coming to me from Reddit communities talking, and somebody asked me, how do I gamma hedge? And my first thought was, why do you want to, number one, why do you want to do that? And number two, like, who told you this? Because this is somebody who's just like very new to options itself. Mm-hmm. And they kind of said, like, gamma hedging, it's the holy grail of option strategies and it never loses. And I was like, oh, really? And it just, that was kind of the essence. Like, we talk about butterflies and same day condors here, mm-hmm. and gamma hedging is another option strategy, right? And I kind of wanted to toss that into the ring and say, number one, as a retail investor, like all three of us kind of are, do you gamma hedge? And number two, should we or not?
Okay, so let me stop you there. We're going to take a couple steps back. So we're going to let Mark be his scientific professorial self and define gamma for people who might not know what that is. So, Mark, I'm putting you on the spot, but I know you know the answer, so I'm not worried. So, first of all, let's gamma is one of the Greeks, okay? And you can talk about the derivatives of it if you want and get a little technical. But what is gamma for some of the newer folks who are watching and might not know what that means?
Sure. So gamma is a sensitivity, right? It's a sensitivity in the options pricing model to how much your delta is going to change as the underlying stock moves. So when you're hedging your gamma, you're adjusting your delta position that has accrued due to movement in the underlying.
Okay, perfect. So that being said, gamma can be in a position, okay? Can be either positive or negative cumulatively, right? You're going to have some shorts, you're going to have some longs. The net number is going to be your gamma position in the the overall position, right? So the interesting part here is for a retail person, I find it peculiar that we would worry about the gamma part of this. Any thoughts there? I know, Jason, you just said it. Mark, you have any thought on that? Is it something that you find valuable for a retail person, or is price more of an interesting component? I bought it at $5. I'm selling it at $8. That's all there is to it.
I think you're right that price is definitely going to be the most important part of it. And, I think it's just funny that like gamma scalping is this like very sexy name for what's basically just risk management. Like market makers, dealers are hedging their gamma, they're scalping their gamma. They're just managing their exposure because they've gotten deltas because stocks have moved. It's not because they're like able to buy low and sell high magically. Like they buy low and sell high magically because they have some theta that's bleeding out and they need to hedge their position as stocks are moving and compensate for, what's changed in the portfolio. So like it's kind of got a cool name, but it's just hedging and risk management and like completely orthogonal to like what's, I think what a retail trader should be thinking about.
Yeah. So that's a great point. So from and one of the caveats with the thrown in the dealer part of this equation is that don't forget what a dealer does. He's an inventory master of option stuff. Those are his products. So he naturally has that inventory in his fold, and he has no other choice but to manage that Greek risk, because he isn't buying offers and selling bids to get out of it. That's not his model or her model or its model, right? So they have to employ some sort of gamma hedging or gamma scalping to sustain profitability and move the portfolio around a little bit as well, right? Mark, what'd you say?
Yeah, and it's only called scalping because when you're necessarily long gamma, when you're back spread, when you own options, you don't call it gamma descalping. I mean, pejoratively, you can, of course, but like, if you're short options and they're going away from you and they're going through your strike, Like, do you want to hedge that too? That's like the flip side of this whole thing. So like,
Right. It's
just risk and inventory management. It's not like a strategy in and of itself any more than, it's just risk management.
Yeah. I'll tell you a quick story too. When I first got into business in the 1800s, my backer was a long gamma, long premium kind of person. That's what he did. So I held his computer, and he was one of the first ones to have a computer, and it had his, had price ranges. So spot zero was where the stock was now. And he had them up every 25 cents, let's say. I don't remember exactly, but he had 10,000 gamma in one of these stocks. And he just said, I want you to sell 10,000 shares here. And if you do, I want you to buy it back $1 lower. And if it goes down $1, I want you to buy 10,000 and blah, blah, blah. So I understood that easily. And he did this religiously. And I'm like, God, this is the greatest trade in the world. I love it. So this is when I was a clerk. And when I finally got the money put in my account, I passed all the tests and his tests. I went down and said, wow, that was easy. I'm going to do that. Well, guess what?
How much did that 10,000 gamma cost?
It was expensive, and it blew my account out in 6 months. So I was like, that crap doesn't work. What the hell? How come he can do it so easily? What I didn't know was all the other stuff that was going on in the trading part of it.
Right.
That he was massaging the hell out of that entire inventory by trade. And for me, being long gamma and long premium, and it's just not my personality. Okay, so it's not for me. I just feel that I feel like I'm thrown into a lake. I can't touch the bottom. I've got army boots on. I've got flak wear. I've got a weight vest, and I just got to tread water, gamma scalping, so that my head stays above it. I'm not losing money. And occasionally I start gurgling going under, and then hopefully I get an outsized move and I can take all that stuff off and get to the shore. That's my analogy of long gamma. Now, have I ever done it in my pro world? Of course I have. I've had to, but it isn't my favorite. It isn't my favorite. I like the other side of that selling premium. I like being the timekeeper, which means kind of like Warren Buffett. I'm selling insurance premium. I'm collecting it. I'm going to pay a claim once in a while, but if my tables are correct, it's very much limited because I'm risk kind of adjusted as well. So I know Mark, you come from a different world. So you're the other side. I get it.
A little bit longer than you.
Yep.
So, I mean, first of all, I got this image in my head when Lex was saying he was the first one down there with a computer, all these, people, all these cavemen in loincloths with abacuses.
No, it was the 1800s. I told you
that. But anyway, the thing as a retail, as somebody who's never been a market maker, but has heard of gamma hedging and looked at it and even has a program that would do it for me. Yep. It's very costly for the retail investor between either commissions or PFOF or slippage. Every single trade you're making, you're just losing a little bit of edge every single time. And, these people are trying to dynamically hedge the retail. The retail gamma hedgers are trying to dynamically hedge. And their portfolio is one long straddle. So it's kind of like there's a very narrow path to profitability in gamma hedging as a retail investor. So that's kind of why I was
so yeah, I think it's a good point. And Mark, I think you feel the same way about that for a retail person. I'll let you chat on this after a second, but I agree with that. My feeling is that for a retail person, your first job is to have a thesis, okay? A trade idea generated. I don't care what it is at this point. It could be when it's cloudy out, for all I care. But make sure it's somewhat backed with some sort of data. Once you have that, you better have an exit strategy after that. And it doesn't mean gamma scalping. It means getting out of the position. Either it's going to go bad or it's going to go good, and hopefully it goes good all the time for you retail folks, and you're always getting out for profits. But to me, that's kind of the retail model. You don't have the ability as a retail person to live and thrive between the bid and ask. I get spiders are really tight. They're a penny wide. I totally understand that. So maybe that's a place you can play a game. But you're giving up edge every time you make that decision. So why not make it in a little bit of a time frame so that your strategy can marinate and come to fruition and you get out? Okay, Mark, any of that make any sense at all for a retail guy, not for a pro?
Gamma scalping isn't a strategy. Like it's not. Yeah. That's like saying selling stock is a strategy. Like it's meaningless to say that like gamma scalping. It's just something that you do by nature of managing a book of risk. It's not a strategy.
Yep. Right. Here's a nice comment from Lucas. You guys read that? I'll read it. I tested dynamically hedging my short premium, and the only way to make a profit is to just go naked. I've gone naked a lot. It's not pretty. I had to learn it the hard way. So I would say be careful with naked. And I don't mean taking your clothes off. I mean not having protection. I lost a large six-figure number in the pro days, Gene, being just naked long calls. It probably works most of the time, but when it doesn't, it's really going to leave a mark. It's going to take an arm off or a leg. So you got to be careful on those. Love selling the premium, but I want to know what my ultimate risk is. Good point. Thanks, Lucas, for that. All right. Unfortunately, guys, you know what time it is. It's time to sing the goodnight song for today. Great show. I want to tell the audience, too, make sure you email me on this. This is important because I don't have my code up. So it's lex@tradier.com. If you aren't a Tradier account holder and you want to be, send me an email. We have a promo for you. You can get up to a year free of Tradier Pro with us and all kinds of good stuff beyond that, depending on account sizes, blah, blah, blah. But we can chat in the email, lex@tradier.com. We will have a promo QR code in a future show. We're working on that. Mark, tell them about yourself. Give them a commercial. Where can they find you?
You can find me at harvestedfinancial.com. And if you're interested in more details about gamma scalping, I actually wrote about this last week in the Till. So check out till.substack.com for why gamma scalping isn't a strategy.
Perfect. Thanks. And Jason, give them your plug here.
www.vol.land for dealer positioning. And yeah.
And that's it? No ADM funds? Okay, no
Dealer
ADM.
positioning. Yeah, we also have addamfunds.com, but I try to avoid talking about addam funds because that's an RIA. Mark's an RIA,
Oh, I get it. You guys want to compete. Oh, let's all tie and get a little first place ribbon. Terrific. All right, great show, guys. Thanks for coming. Have a great weekend. Mark, what else do we have to do with the rest of the week?
Happy trading.
Thanks, guys. Have a good one.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.